Welcome to Alpha Talks Editors Roundtable. What moved the markets this week for Friday, June 12th, 2020. I am joined once again by my panel of Seeking Alpha editors. Aaron Task, VP Contributor of Content and co-host of the Alpha Traders podcast. Bradley Olison, VP of News. And Stephen Alfer, Managing Editor of Breaking News and the other co-host of the Alpha Trader podcast. I'm your host, Nathaniel Baker, Contributing Editor here at Seeking Alpha. It was an eventful week, quite a bit of volatility. And first of all, I hate to break this to many of our potential retail traders, but stock markets do not always go up. We learned that this week with a pretty dramatic sell-off on Thursday, the Dow and S&P dropping north of 6% in one day, making for one of the worst trading days of the year. Not the worst, I believe it was about the fourth worst.
You know, in hindsight, this was so obviously coming, right? I mean, last week you coined the term POMO, panic of missing out. I mean, it should have been obvious to all of us that things were getting just a little bit too frothy. I mean, you had David Portnoy, aka Davey Day Trader, the guy who runs Barstool Sports, calling Warren Buffett an idiot. You know, lots of stories about Robinhood traders and all the money that they were making because trading is so easy. And, you know, history doesn't repeat, it often rhymes. It reminded me of 1999 when there were a lot of stories about dentists who were making so much money trading .com stocks that they were shutting down their practices. So, yeah, the market had a phenomenal historic rally off the March lows. And so it's not a surprise that there was some setback. It was a pretty big down day in three days in a row for the S&P 500 for a total decline of about 7%. I guess in this world we live in of accelerated trends, that's normal. But as we're seeing here Friday, there's still a lot of interest in the market on, you know, the buy the dip mentality prevails. And I don't think that was it. I don't think that was the end of the post-COVID rally.
Obviously, before we had the choppiness that Aaron was just mentioning, we were getting up into the nosebleeds here. You know, NASDAQ hit 10,000 and just looking at some of the big movers this week, just running a quick screen of stocks worth more than $100 million in market cap. I think I counted of US traded stocks, more than 150 that were outpacing the S&P's best gainer, which was Carrier Global. And Carrier Global itself, a spinoff of United Technologies, was up 95% year to date, which itself is an extraordinary number in light of what we've all encountered these past few months. But, you know, more than 150 names worth more than $100 million were outpacing that. You know, you also had the Russell 2000, which kind of gets to these Robinhood names, these small caps, was up 16% from just the middle of May through to the early part of June, where the S&P was only up 10%. So obviously a lot of froth, but I do want to point back to what we mentioned here last week, which, you know, just I think in passing was that the cases were on the rise. You know, listeners may have been prepared for some of these scary headlines that were circulating. Texas, Florida, Arizona, the cases were starting to pick up a little bit. Most of the financial media was pointing to the worsening situation there as some of the reason for some of the sell-off that we saw in the middle of this week. So, you know, we're seeing some of that in the data also. Some of the better performers this week were the Colgates, right? The household staples, the Amazons of the world, Netflix. You know, these are all names that benefit from the stay-at-home environment. Then you want to take a look at some of the names that were suffering, and you had the going out names, right? The Nordstrom, some of these retail names, Nordstrom, Gap, even airlines took a hit to, you know, this week with Delta, Alaska Air. And curiously, even though Vegas, you know, got a lot of press, you know, in late last week with some of the reopening, MGM was one of the second worst performers in the S&P this week. So definitely, you know, a little small rotation that we saw, but definitely you saw some of the froth. And, you know, it's a little healthy to take some profits here. It doesn't hurt.
Sure. And the immediate catalyst appears to have been this second wave that you mentioned, which, by the way, I am assured is not actually a second wave, but a first wave. Still part of the first wave. That's according to some of these experts that have been speaking about this subject. And because the previous day, the big news was the Fed saying that they would keep interest rates at their current levels through 2022. So that's another 2.5 years of these at or near 0% interest rates, which one would think would be bullish for the market. But, we had the big sell-off. But anyway, there was also quite a bit of corporate news. And Stephen, what were some of the highlights there?
I'm looking at the Hertz news as kind of a indicator of kind of the speculative fervor that remains despite yesterday's 6% sell-off. Hertz, which is declared bankruptcy, which more or less means its common equity is worth zero. Kind of went through the roof, peaking on Monday along with the markets. It's since sold off quite a bit, but I see it's up again 30-40% today on a plan to dilute shareholders even more with the issuance of even more shares. So you have common equity that's ostensibly worth zero, and now they're issuing more stock on top of that, which dilutes stock that's already worth zero. Yet the stock is going through the roof. So there's still kind of plenty of speculative fervor. I'm not saying I don't want to be Debbie Downer here. I mean, maybe there's an Ackman like GGP workout here that's going to make those folks who are buying the stock for pennies, make them very wealthy. I don't know, but companies declare bankruptcy means that the bondholders are going to get paid everything, and the stockholders are going to be worth zero. Yet the stock is kind of going through the roof today.
How does the negative dilution work, right?
Right.
Is that even possible? What the market cap's only 500 million. They're issuing $1 billion in stock. That's quite a bet on the future. You'd have to say.
Yeah, we have negative rates. Why not negative dilution, right? I mean, let's just. I think all these companies should do this. And yeah, Stephen hits the nail on the head with the Hertz is the most egregious example, and I guess you got to tip their hat to them for the audacity to say like, oh, there's people speculating on our stock. Let's sell more of it. But you have this kind of action in a number of stocks like Whiting Petroleum. Chesapeake Energy, just on the rumor they were going bankrupt, the stocks, went from 15 to in the 70s and back to the teens again just this week on some rumors of a potential bankruptcy filing. So, again, more evidence of the kind of the frothiness that we're talking about. And it does seem like some of those Robinhood type traders were actually like looking for bankrupt stocks or news of bankruptcies as a reason to get long. And again, maybe in a world of negative rates, it's like Superman's bizarro world, what's up is down and what's down is up. But history suggests that that's not going to be a winning strategy in the long term.
And I saw Jeff Mackey had just the funniest tweet yesterday along those lines. It said Macy's is down 11% on news that it's not going bankrupt.
Exactly. There you go.
Okay, this is the segment of the show where we discuss some of our favorite articles and stories that we saw, and in some cases even edited on Seeking Alpha and elsewhere.
I saw an item from an author named Plutos on Seeking Alpha, Ploutos, who I've always enjoyed reading his or her stuff. And this was before the sell-off, and the title of it was The Magnitude of the Recent Rally, in which Plutus kind of went through exactly, kind of the historic move that we've seen from late March. And by any measure, by any time frame, it's pretty crazy. And of course, there was a historic sell-off prior to that.
So I hate to disappoint some of our regular listeners, but I don't have any celebrity news to talk about.
Okay, let's skip you then. Next.
And there's no Cody or any others Jenner family news this week. Although you could argue the firepower or the name recognition is just as strong. For me, it was Tesla and Elon Musk. Tesla breached a key level, $1,000 a share this week. This has a whole lot of power psychologically for a lot of the investment community. And that happened in conjunction with Nikola, which is this new IPO last week, which doubled, right after it went public. It's Nikola, for listeners not familiar, is a heavy truck maker operating off of hydrogen power. And just this week, they announced that they are moving forward to take orders on their Badger line, which is actually supposed to compete with, as a light heavy truck, more akin to the F-150. And between going public and announcing this, you know, the stock has just gone crazy. So, you know, I saw an interesting reference on Twitter the other day, how someone wants to come up with Nikola Tesla's middle name and take that company public, right? It seems like you can do no wrong with anything associated with that inventor.
You know, there was a rock band called Tesla from the 80s. I'm wondering if there's some way maybe to buy their merchandise and profit from this, but no. Anyway, Aaron, what about you? Stories, articles that you saw?
I'm just trying to get my head around cornering the market on Tesla's merchandise. The band, of course.
There's probably a secondary market out there. I mean, there definitely is on eBay.
There sure is. I mean, yeah, I probably know way too much about Tesla to go on, but their cover of Signs is one of my all-time favorites.
Yeah, that's really good.
So, okay, in terms of individual articles, one, Dan Dicker, who's a well-known energy analyst, did a piece called "Impending Chesapeake Bankruptcy: A Bullish Message to Oil Investors." It really took a longer-term view. This idea that, you know, the U.S. shale producers, in his view, have just, you know, been overproducing for years and years and been able to sort of keep the party going by their ability to continue to borrow cheaply, but that their activity is actually negative for the energy sector in general. So sort of taking a contrarian take that if, and it's still an if, a big player like Chesapeake were to file bankruptcy, that actually might be a sign that some rationality is returning to that space. Now, of course, you know, there's a lot of concerns about the financial sector's exposure to the U.S. energy patch and some of the fallout that we can see from there. But again, just, you know, Dan's, you know, really sharp guy on energy, and I thought that was a very interesting kind of contrarian take. You know, just I think I've done a couple times here. You know, again, sentiment-wise, there still is a lot of popularity among Seeking Alpha site for stories with a negative slant. Among the most popular articles the past few days: "Be warned, market momentum is fading. The next stock market crash may have just started. Cut these dividend stocks before they cut. The Fed just issued a dire warning for the stock market."
I don't think it's a coincidence, or that the market sold off 6% on the day that the PGA Tour began playing again.
There you go.
There you go. That's the best.
Somebody should chart these things.
Yes, yeah. I'm sure somebody
all
is.
Right. I guess we'll leave it there. Thank you all for listening, and we look forward to speaking to you again next week.